Welcome back to Investing Talk Podcast. Today we're cutting through the noise and really looking into a company that sits right at the intersection of digital transformation and cybersecurity, Cloudflare. If you've been watching their stock, maybe pondering their unique market position, or just wondering, how a company can command such a high valuation while still reporting losses, well, this conversation is crafted just for you. We've sifted through all the key information to help you understand what's genuinely important here.
It really is a compelling company to explore, especially as the digital landscape just keeps evolving at, well, a blistering pace. Cloudflare operates in an arena where innovation isn't just an advantage, it's pretty much a necessity. So we're going to unpack their financial health, their competitive landscape, and the future outlook to give you a truly comprehensive picture, peeling back the layers, so to speak, to reveal what's driving their story.
Okay, and before we jump into all the intricacies, if you're finding these insights valuable, please take just a moment to subscribe, hit that like button, and maybe leave a comment. Your engagement really helps us bring more of these conversations your way. And for those feeling extra generous, consider buying us a coffee. It definitely helps keep this content flowing. So let's set the stage. Cloudflare is a name many people hear, especially in tech circles, but what exactly do they do? What's their core offering in this vast world of cloud services?
Well, Cloudflare essentially acts as like the internet's essential utility grid for businesses. Think of it this way. Imagine a company's website or application as a house. Cloudflare isn't building the house itself, but they are providing the crucial infrastructure that makes it secure, resilient, and importantly, blazing fast. They kind of sit between your users and your servers like a high-tech bouncer and traffic controller all rolled into one. Their core offerings include cloud-based security solutions, web and application security products, and connectivity cloud services. We're talking web application firewalls, bot management, and distributed denial of service, or GDO protection, which, for those less familiar, is like preventing a massive coordinated traffic jam designed to crash a website.
Right, that's critical.
Exactly.
Yeah.
They also handle API security, SSL TLS encryption for secure connections, and even script management.
Yeah.
So ultimately, they help make the internet experience safer and faster for pretty much everyone.
That's a powerful analogy. So they're really at the forefront of protecting and optimizing online presence in what feels like an increasingly vulnerable digital world.
Yeah.
Given that vital role, what's their standing in this dynamic market?
Oh, they're not just playing in the game. They're truly carving out a leadership position. They're often challenging the old guard, in a fiercely competitive space. Cloudflare is widely considered a top-tier content delivery network and security provider, frequently mentioned in the same breath as companies like Akamai Technologies and Fastly. What's particularly noteworthy, though, is their growth trajectory. They're expanding faster than some of those more established legacy players. They've also cultivated very strong brand recognition, especially within the developer community and among enterprises. And all that is underpinned by a truly global network infrastructure that's constantly expanding.
That global reach and brand recognition sound like formidable assets. What would you pinpoint as their most significant competitive advantages? The things that let them outpace even some larger rivals?
Well, beyond the sheer scale of their global network, I'd say it's their proprietary security tech stack and their, frankly, remarkable pace of product innovation that give them a distinct edge. They're constantly developing and releasing new features. Plus, their comprehensive suite of cloud-native products and developer tools allows businesses to build directly on their platform. That creates a sticky ecosystem, that's hard for competitors to replicate. This developer-first approach often fosters a really passionate user base, which contributes to their network effects.
Okay, so we've established what Cloudflare does and where they stand in the market. But the question every investor has is, how does all this innovation translate onto the financial statements? How has Cloudflare been performing on the numbers front?
Right, the bottom line. Well, their revenue growth has been nothing short of explosive, really. In Q1 2025, they reported an impressive $479.1 million in revenue. That marked a robust 27% year-over-year increase.
Wow.
And if we zoom out a bit for the broader context, their trailing 12 months revenue as of March 34 in 2025 hit $1.77 billion. That's up from $1.67 billion in the previous fiscal year.
That's an impressive top-line surge. How does that compare to their historical growth trajectory? Is this a new thing or more of a consistent trend?
Oh, this isn't a flash in the pan. Cloudflare's revenue has grown at a compounded annual rate of approximately 32% over the past 3 years.
32%, okay.
Yeah, and that includes substantial annual increases of nearly 29% in 2024, 33% in 2023, and almost 49% back in 2022. It really speaks to a very consistent demand for their services.
And what about their earnings? Are they profitable? Especially with that kind of revenue growth? This is often where high-growth tech companies can get, well, complicated.
It certainly can. And you're right to ask, when we look at their financials through the lens of generally accepted accounting principles, or GAAP, they remain unprofitable. For Q1 2025, their GAAP EPS was negative $1.11, which was actually slightly worse than the previous year.
Okay.
However, it's a different picture when we look at their non-GAAP numbers. On a non-GAAP basis, they reported $0.16 per share for Q1 2025. Now, that was flat year over year, just a penny shy of consensus estimates. And looking ahead for the full year 2025, their non-GAAP guidance is between $0.79 and 80 cents per share.
So unprofitable by GAAP standards, but positive on a non-GAAP basis. Maybe just briefly, for our listeners, what's the core difference there? Why do companies often highlight these non-GAAP figures?
That's a really fundamental distinction for investors, right?
Yeah.
Think of GAAP as the strict official accounting rules. It's the by-the-book report. Very standardized, gives you a conservative picture. Non-GAAP, on the other hand, often excludes certain things, like one-time costs or non-cash expenses. Stock-based compensation is a big one for many tech companies.
Got it.
So companies use non-GAAP to present what they believe is a clearer picture of their operational profitability, how the core business is performing, taking out some of that noise. It's useful for understanding underlying trends, but, savvy investors always look at both. You need the full story to understand how much cash is actually hitting the bank.
That makes perfect sense. And speaking of cash, how does their free cash flow look? That's often a crucial metric for these growth-focused companies.
Yeah, absolutely. And their free cash flow, or FCF, is actually showing very encouraging improvement. In Q1 2025, FCF was $52.9 million. That's a healthy increase from $35.6 million year over year. This indicates improving cash generation efficiency, with an FCF margin around 11%. This is important because it shows the company is generating real cash from its operations, even if those GAAP profits are still elusive. Plus, the company also maintains a very strong cash position, holding $1.91 billion as of March 31st, 2025, and historically low debt levels. That strong balance sheet provides a lot of flexibility for future investments and growth.
Okay, so we have this picture. Strong growth, improving free cash flow, but still those persistent GAAP losses. This brings us to the elephant in the room for many investors, the valuation. I mean, how do we even begin to rationalize a price-to-earnings ratio over 100 for a company not yet consistently profitable on a GAAP basis, even in this tech market?
That really is the core question, isn't it? It's kind of tricky. When we look at their non-GAAP earnings, with a recent share price around $85, their forward price-to-earnings ratio is roughly 106 times.
106, wow.
Yeah. This is significantly higher than most software and cloud peers, where, industry averages typically range from maybe 30x to 50x for profitable SaaS companies. And as you noted, the GAAP PE is actually negative 846, which starkly reflects those ongoing profitability challenges.
So what's the rationale?
Well, investors aren't just buying current earnings here. They're buying into Cloudflare's unique position at the edge of the internet, their relentless innovation, and just the sheer scale of the addressable market for security and performance. They're essentially betting that network effects, combined with that developer-first approach, will lead to compounding growth and eventually significant profitability down the line, even if it's years away. It's really a conviction play on future market capture and dominance.
That sounds like a major red flag by traditional metrics, but you're describing a market that's valuing future potential very, very highly. So despite those numbers, why has the stock seen such significant momentum? It's more than doubled over the past year.
It's been a meteoric rise, truly. As of late June, Cloudflare traded around $182, marking a new one-year high and continuing this impressive uptrend that's persisted since late 2019. Like you said, it's more than doubled over the past year, soaring from around $69 to over $190.
Incredible.
This recent surge seems driven by several factors. Strong Q1 results that beat top-line expectations, upbeat forward guidance, signaling confidence from management, and just the overall positive momentum within the cloud infrastructure and cybersecurity sectors. Despite those lingering GAAP profitability concerns, the market is currently prioritizing growth and future market share over immediate earnings. That's a classic example, really, of growth at all costs being rewarded in certain market environments.
So what does this all mean for analyst sentiment? Are they just as bullish, or is there some underlying caution there too?
It's a bit mixed, actually. Analyst sentiment is generally positive, with an average buy rating from about 27 analysts. However, there's definitely a nuanced caution because of those very valuation concerns we've been talking about. For example, UBS Group recently raised their price target from $135 to $145, but notably maintained a neutral rating. That indicates they see growth, but believe the current price already reflects much of that potential. Their 12-month stock price forecast is around $142, which actually represents a decrease from the recent higher trading price, highlighting that gap between market momentum and maybe more fundamental valuation.
Interesting. And what about the everyday investor? What's the word on platforms like X and Reddit? Are they feeling the same sort of cautious optimism, or is it just pure euphoria?
Well, investor sentiment across social media platforms remains largely bullish, kind of riding the wave of that new one-year high. You see a lot of posts highlighting optimism about sustained sector tailwinds and Cloudflare's innovative edge. But you do find a healthy dose of caution about the valuation among more experienced investors or those who dig into the fundamental numbers more closely. So it's really a mix of excitement for the growth story and a pragmatic awareness of the high bar the company needs to clear.
Let's broaden our view a bit then. What are the major industry trends Cloudflare is uniquely positioned to benefit from? And who are their key competitors in this evolving landscape?
Sure, Cloudflare is definitely riding several powerful tailwinds. The acceleration of global digital transformation, the ongoing, really unstoppable shift to cloud computing across all industries, and the increasing sophistication of cyber threats. All these are driving immense demand for their web security and performance solutions. Every business, from the smallest startup to the largest enterprise, needs to be faster and more secure online, and Cloudflare provides those critical capabilities.
That sounds like a truly fertile ground for continued growth, but it also sounds like a very crowded and competitive space. Who are they truly up against, and how do they differentiate themselves?
Yeah, it is competitive. Cloudflare faces competition from various angles. In the traditional cloud services and cybersecurity space, they compete directly with companies like Akamai Technologies and Fastly. Now, while Cloudflare is outpacing the sector average in year-over-year revenue growth, Fastly has been a bit volatile and has struggled with customer retention recently. Akamai, on the other hand, is more stable and has a strong focus on large enterprise clients and specialized security solutions.
Okay, so how does Cloudflare stand out?
Cloudflare's unique competitive edge really stems from its edge network philosophy and its developer-centric approach. Akamai, while a leader, is often seen as more legacy, focused on customized, often expensive solutions for massive clients. Cloudflare kind of democratizes that enterprise-grade security and performance. Their network, spanning over 300 cities globally, brings content and security closer to the user. That significantly reduces latency and improves resilience for businesses of all sizes.
Right, the Edge network.
Exactly. Plus, their platform is incredibly programmable. It allows developers to build right on top of it, which fosters a powerful ecosystem and creates very sticky customer relationships. That's something traditional players, or even the hyperscalers, find harder to replicate directly.
That detailed differentiation really helps clarify things. But with all that competition, what are the big risks they face? What could potentially derail that growth or temper investor enthusiasm?
There are certainly significant risks, no doubt. Intense competition is always a factor, especially from the hyperscalers, Amazon Web Services, Microsoft Azure, Google Cloud.
The big three.
Right. These are colossal cloud providers who are also building out their own security and performance tools, though often not with Cloudflare's specialized focus or that edge network architecture. Then there's the evolving regulatory landscape around data privacy and security globally. That can introduce compliance costs or operational complexities. And of course, the ever-present threat of cybersecurity incidents impacting their own reputation or network integrity is a constant concern for a company like this.
Makes sense.
And finally, we have to come back to their ongoing net losses under GAAP accounting and the extremely high valuation. Those present a clear risk if future growth slows down. The market's patience for growth without corresponding profitability isn't infinite, right?
Right. So on the flip side, beyond the general sector tailwinds you mentioned, what are the specific opportunities that could drive further upside and maybe justify that premium valuation down the road?
Well, beyond those broad tailwinds of ongoing digitalization and the move to the cloud, their continued innovation and product expansion potential offers significant opportunities. While no major new product launches were announced recently in the materials we looked at, Cloudflare has a proven history of continuous development. Areas like network security, zero trust solutions, leveraging AI to enhance their offerings, their ability to expand their platform and capture new market segments, perhaps even deeper into enterprise IT or specialized industry solutions, could truly drive future growth. They're just very well positioned for the increasing demand for secure, fast, and reliable internet infrastructure, especially as more applications move out to the edge.
So if someone is looking at Cloudflare right now, what should they be watching for in the near future? What could really move the needle?
The most significant near-term catalyst is, without a doubt, the company's next earnings report. That's scheduled for July 31st, 2025.
Okay, end of July.
Exactly. That report could significantly impact stock performance. Investors will be scrutinizing not just revenue growth, but also any discernible signs of improving GAAP profitability, or at least a clear pathway towards it. And updates on free cash flow generation will be key. Any shifts in their guidance will also be absolutely critical.
Okay, so bringing it all together then, what are the key takeaways for listeners considering Cloudflare, balancing its undeniable strength with its, well, considerable risks?
For any investor looking at Cloudflare, this is really the core consideration, isn't it? Cloudflare clearly has a strong market position. They operate in rapidly expanding markets like cybersecurity and AI adoption. They have significant long-term growth potential. They're a leader in their domain. However, it's absolutely crucial to acknowledge the very high valuation concerns and the company's ongoing net losses under GAAP accounting. It represents a growth story, yes, but one with a very steep price tag attached.
So for our listener, what's the summary thought, maybe a recommendation based on everything we've seen in this discussion?
Well, based on this analysis, for investors who are already holding Cloudflare, it could probably be considered a hold. They're already in, they've likely seen significant appreciation, and the growth story does continue.
Okay.
For new investors, however, I'd say significant caution is advised, precisely because of those valuation concerns and the continued net losses. The stock's future performance will depend heavily, I think, on the company's ability to effectively execute its ambitious growth strategies and, critically, to demonstrate a clear and accelerating path towards sustained GAAP profitability.
It's really a high conviction, high risk, potentially high reward kind of proposition.
That was a truly comprehensive look at Cloudflare, from its product innovation, its market position, all the way through its intricate financial landscape. We've really dissected a company with explosive growth and a strong market presence, but also some very significant valuation challenges and profitability hurdles that, frankly, just can't be ignored. Understanding that dynamic balance is absolutely key. It's a powerful reminder, isn't it, that even in the most exciting high-growth sectors, the path to sustained profitability and a valuation that makes traditional sense often takes considerable time and comes with its own set of risks.
Absolutely. So what should you, our listener, perhaps mull over after this conversation? Consider how much you value that future growth potential against current profitability and, well, traditional valuation metrics. In a market where innovation is so often rewarded, how long can a company really defer GAAP profitability while still commanding such a premium valuation? What's the breaking point for investor patience?
That's a truly thought-provoking question to leave you with, especially in today's tech market environment.
Thank you for joining us for this look into Cloudflare. We hope you feel more informed and maybe a bit more ready to make sense of the market. Until next time, keep learning and keep investing wisely.